Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Institutional crypto management is fracturing along strategic lines. BlackRock's latest Bitcoin ETF monthly rebalancing highlights a passive, long-horizon approach. This stands in stark contrast to ICE Alpha's daily AI contracts. The divergence signals a battle over custody and velocity. One side seeks stability. The other demands speed. Meanwhile, macro uncertainty is driving capital toward hard assets. Robert Kiyosaki is closely monitoring gold, silver, Bitcoin, and Ethereum. He is watching for technical reversals. The catalyst? Escalating tensions in the Strait of Hormuz. These geopolitical frictions are testing the fragile US-Iran ceasefire. Investors are hedging against supply chain disruptions. The move away from fiat reflects deep-seated inflation fears. On the macro front, the Federal Reserve has entered a new policy era. Yet, the housing market remains stubbornly tight. Home buyers face persistent affordability headwinds. Interest rates have not dropped fast enough to restore balance. Economic indicators suggest the labor market is cooling, but not collapsing. This higher-for-longer reality is squeezing middle-class demand. The disconnect between monetary policy and real-world affordability is widening. In related news, political instability is rocking South America. Argentina's cabinet chief, Manuel Adorni, admitted to concealing $500,000 in taxes. This revelation has sparked immediate congressional scrutiny. The scandal adds pressure to President Javier Milei's reform agenda. Markets are watching closely. Political credibility is as vital as economic data in emerging economies. The tax gap raises questions about fiscal transparency and enforcement capacity. Looking ahead to today's release, the economic calendar is notably quiet. There are no major high-impact releases in the next 36 hours. This absence of data allows markets to digest recent geopolitical and corporate news without immediate volatility triggers. Traders are positioning for low-volume days. Expect choppy price action in major indices. The lack of fundamental catalysts means technical levels will dominate trading decisions. Binance's recent market impact is further complicating the crypto landscape. Analysis shows significant influence on Bitcoin and altcoin volatility. Technical indicators like the RSI and MACD are flashing mixed signals. Price movements are increasingly tied to exchange liquidity rather than fundamental adoption. This concentration of power raises regulatory concerns. The interplay between centralized exchanges and decentralized protocols is becoming more complex. Investors must navigate both technical charts and regulatory risks. The convergence of these stories paints a picture of a market in transition. Geopolitics drives safe haven flows. Monetary policy dictates borrowing costs. Political scandals test emerging market stability. And crypto infrastructure evolves under scrutiny. Each factor influences the others. A shift in one area ripples across the entire financial system. Investors are adapting to this new normal. Diversification is no longer just about asset class. It is about jurisdiction, technology, and political risk. The old rules of correlation are breaking down. Gold and Bitcoin are moving in tandem during crises. Housing and rates are decoupling in unexpected ways. Understanding these nuances is critical for capital preservation. Stay alert to sudden geopolitical developments. Monitor the Strait of Hormuz for any escalation. Watch for Fed speeches that might hint at rate cuts. Keep an eye on Argentina's political stability. And track Binance's trading volumes for crypto sentiment. These are the key indicators for the coming week. That's your market briefing. Follow Rumour with AI for daily market intelligence.